That has kind of been my secret sauce over the years, is that I find phenomenal people who are executors, and I find a way to like polish them up and be able to put them in front of, the right people, and teach them how to like speak, the Wall Street terms, teach them how to
Like all the
present
esoteric
themselves.
language, right?
Exactly. Those have been like the best bets that I've ever taken, and it has really paid off. I'm a daughter of the continent. These are the skill sets that I have now. How can I give back to home in a way that actively like helped companies be able to get to where they want to get to, right? So I did that for the most of like 2020, 2021, 2022. And I think just by that alone, I cannot tell you, Dom, the number of phenomenal companies I met. And also, word travels fast in this industry. You help one person, they're gonna tell all their other friends about you. Who moves from doing private equity to doing venture capital? I said I do, because I've also found a role where I can directly work with founders and actually help them like build their businesses.
So you just have to be like on a beach.
I I just have to be on a beach. That is all I want. That is a life that is meant for me.
People ask me all the time, why is getting a job harder than my actual job? Then I tell them, imagine being a recruiter. I wasn't always in executive search. I was an engineer, a broker, and then cold called my way to being an investor. And as I networked with my peers in the industry, I found their stories to be fascinating. It's the people that make the industry special to me, and that's where I put my focus, the talent and the stories behind them. It's an honor to work with the elite executives, and I wanted to create a platform to put their stories on display for the world. Welcome to the Investment Committee.
We're pleased to welcome Jemimah. She's an early stage investor and a director in one of Wall Street's biggest firms. She brings over 8 years of investing in emerging market economies as an angel investor in her day-to-day work. She began her career in private equity at Goldman Sachs, where she was an investor in a $6 billion impact-focused fund covering clean energy and financial technology in emerging markets. In her current firm, she invests in early-stage companies founded by underrepresented founders. Over the last 2 years, the team has welcomed its first 4 African companies into the portfolio. In addition, Jemimah is a limited partner at Refashion VC and an advisory board on 7C Capital, an emerging markets tech-focused VC fund. Jemimah is fiercely passionate about channeling diaspora capital to Africa and making startups on the continent easier to invest in for professionals in the diaspora. She writes about the practical steps to do this and much more in her weekly newsletter, African VC Decoded, which has garnered readers from across multiple countries. Jemimah, welcome to the Investment Committee.
Thank you. So glad to be here.
Thanks for coming.
Absolutely. Thanks for having me.
So, Jemimah, how did you become an angel investor? Walk us all through it.
It's actually a really interesting story. I was in college. I was a sophomore in college. It was my second year in. Mind you, I was born in Nigeria, grew up between like Nigeria and Ghana, and then somehow just like uprooted myself like to America for college.
Okay.
And it was as a sophomore in college, it was the first time that I heard about the concept of like buying a part of a company. And now being in America, and especially when you're doing, that USD conversion, right? Like back to CDs or Naira, you realize that like the dollar goes a long way. And so I was like, wait a minute, you're telling me that you can start a company, have people invest in it, and then like if I'm an investor, my money is just growing whilst I'm sleeping, huh? And so I was like, ooh, why will I invest in American companies when I can invest in African companies and my money goes a lot further? And so I started saving. I used to work a $17 an hour job at Bass Library at Yale, and I started saving like $1,000 at a time. And so once I get $1,000, I would obviously go home like in December, and then I would find like a company to invest in, and I would do that like 4 times a year, right? And so and I say that story, it's really interesting because I was an investor before I knew what investing really was, right? And I feel like now people are like, oh, I work in VC. But it's like, no, like I was actually doing this before I understood like the concept or like the hype behind the industry. But yeah, that's how I started.
When did you around what time was this?
I was a sophomore in college.
Wow. And so you were able to tap into that early. And so how long did you continue doing that?
I did that the entire of my college year.
Wow. And so did you ever want to partner with anybody, or was anyone else interested in doing it with you alongside you? How did you make more connections along the way to grow it? What were the efforts that were put in place?
So the interesting thing was nobody seemed to be able to care about it as much as I did. Because I kept saying, look, I'm earning USDs barely, working like my student job.
Right.
This money goes so much further back at home. And everyone kept saying, but why is that so important to you? And I was like, but nobody's funding our businesses back home. I was like, why will I put my blood, sweat, and tears into like the economy here when I can be doing that, but like from a distance, and I can actually be directly contributing to like the prosperity of companies back at home. And I don't know, for me, there was just a certain urgency about it that nobody else seemed to get.
Right.
And yeah, that's how I started. That's how I got my.
So what were the type of companies that you started off investing in back then? Yeah.
It's so interesting because I obviously had no idea what I was doing back then. I think my first investment was into like an ed tech company.
Okay.
I mean, shout out to the company now; they're doing phenomenal, brilliant math and science. But we've definitely gone through a number of pivots over the years. They had more of like an in-person focus. Now they're more online. I did like a water filtering business once. So
And you
yeah,
were still in college at this
I
time.
was still in college at this time. So mind you, I was like taking classes and like learning more about like business and learning more about like different business models. I also did like immerse a lot of my college time spent on like African businesses and trying to really curate my curriculum to focus more on like the developing world. Because I just felt like there was a lot to learn, a lot more to learn there. But yeah, it was. I think the early years were definitely rough.
Right, right. I mean, you're doing it by yourself. It wasn't. I don't even think it was even a big of an industry at the time. So, right. Wow. So, I that kind of has me speechless a bit. I didn't know that. So let's take a step back for a second. For the broad audience, what is venture capital and what does it mean to be an angel investor?
So venture capital is basically the process of raising capital from investors right across the world, and that could be across different stacks. So you have folks that focus more on the early stage side of things. So those would be like your angel investors. Those would be like your accelerators, your seeded accelerators. Some venture studios even have like a capital component of it, and then usually you start from like your seed, where you raise like your seed round. Actually, you really do raise your friends and family round first. Then you raise your seed, the series A, B, C, and then we're getting more into the growth side of things. So for me, the part of VC that I've played in is always has been in a much earlier stage side of things. So usually the first big check, to like some of the founders. And angel investing, to be an angel investor, you have to be an accredited investor, which the definition can vary by jurisdiction based on where you are. But in the US, I believe it's like three criterias that you can look up online.
Gotcha. And so, why focus on the seed stage as opposed to later stages in a company's career?
That's a really interesting question. So in my previous life, I did more of like the later stage side of things in the fund of funds like side of things. But I quickly realized that if you never raise if you never raise like a seed round, you never get to like a series B or series C. I think a lot of times when it comes to especially founders of color and underrepresented founders, the funnel is really the issue. You have a lot of folks at the very early side of things. But by the time you get to like the series B, series C, you realize that people actually do have there's an inherent problem in the distribution of capital and people's ability to actually access rooms where capital isn't. And for me personally, I don't believe that great founders are just found. I believe that amazing founders can also be made. I think, especially in the US within the VC industry, one of the things that we've seen is people people come from particular places. So it's like your Yales, your Harvards, your Stanfords, right? And those are the people that, sadly enough, like a lot of VC founders or a lot of like venture capitalists are more poised to like look at. They're like, oh, this person has a network. They're more sophisticated. They know how to speak to a crowd. They can sell the product. And because of that, a lot of like non-traditional founders who maybe did not go to your Ivies, did not grow up with parents, talking finance and talking shop at the table, but all they know how to do is operate and execute on phenomenal businesses. These people often get overlooked. And Dom, you will be shocked the caliber of founders that I've met who smartest people. Like I would never forget. I once met a founder, two-time YC founder, literally built code for like the U.S. government, for Google, for Apple, for Facebook, like all your major tech companies. Was part of like the inaugural team of engineers that like helped build out like the infrastructure really for these companies to be able to ride on. Could not raise a seed round because he's just a nerd. He doesn't know how to talk to anybody. You know, he doesn't know how to do all those
He
things.
doesn't present.
Exactly.
You know,
It's not
it's not
polished. It's
polished. Right,
not
right, right.
what, you know, the
So you
sexy
can't
VCs want to
the communication
see.
skills aren't there, so it doesn't build that trust amongst
Exactly.
people. But if you really was to take the time with him, I'm sure, and you dig under the hood, you'll see that this is an amazing talent.
Exactly, and that's where I come in. And I think, like, personally, that has kind of been my secret sauce over the years, is that I find phenomenal people who are executors, and I find a way to like polish them up and be able to put them in front of, you know, the right people, and teach them how to like speak, you know, the Wall Street terms, teach them how to
With all the
present
esoteric
themselves.
language, right, and everything,
Exactly. And I think those have been like the best bets that I've ever taken, and it has really paid off.
Wow, wow, that's amazing. And that's where the edge is. That's amazing. And so, what are some of the misconceptions around the venture capital industry amongst the type of work that you do? You know, people think that it might just be Shark Tank, and you know, you sit down and everyone's coming to your office and pitching their ideas. What's it really like?
I think what's really interesting is that I don't know what it is, especially over the past like 4 or 5 years, but VC has become a very sexy term. Like everybody wants to work in venture capital. You know, I'm a venture capitalist.
I want to put the money early and have it
No,
10x to the moon.
literally. And it's
Yeah.
like, and I think every day you're hearing on TechCrunch, you know, this fund raised 200 million, this fund raised 50 million. And it's like, wow, like a lot of like glitz and glamour has been associated with the
A lot
industry.
of media. It's very highlight heavy.
Yes, very highlight heavy. Lots of LinkedIn posts, lots of like
lots of new blood in the new startup. So it's like new ideas. It's technology. It's I can see that.
Exactly. The interesting thing about VC is I think sometimes people just sit down and ask themselves, how do VCs actually make money? Right. So now let's walk.
That's why we have you here.
Let's walk through it. Let's say you have $100 million fund, right? You raise $100 million from your LPs. Now we have something called a 2 and 20. So 2%, you can basically charge 2% for like management fees. That's basically just to keep your lights on, you know, to make sure you can pay folks on your team. But really where the chunk of money to actually be made comes from that 20%, which is after you've returned the $100 million back to your LPs, you get to take the 20% of what else comes after that $100 million.
Right.
So now if you think about it, right, and what? 90% of startups fail. 10% of them, by the way, fail like in the first year.
Wow.
Right. So you have $100 million. You need to return this $100 million before you really start seeing that 20% carry.
Right.
It's a big amount of money to like have to return, especially when you're thinking about the fact that 90% of your bets are going to fail.
You have to be very, very careful.
You have to be very careful. And I think what makes it even more interesting is that a lot of times I think sometimes you meet founders who are building businesses that are not necessarily venture backable, but it's fine. It's gonna be, you know, a mom and pop shop that might grow to a couple of millions of dollars, but they're pitching to a VC and they don't realize that with every single investment in your fund, a venture capital is thinking, okay, is this investment going to return my fund? Does it have the potential to return my fund? Because we know that it's just going to be maybe 4 or 5, or probably even less than that, quite frankly, that if, you know, you're able to like 10x, 20x, you're able to return the fund and then you really start enjoying that carry. So I think a lot of times people have to ask themselves to like, how do VCs actually make money? When I'm pitching to a VC, what is the most important thing that I should be telling them? And I think a lot of times people think, oh, you know, I'm going to play in this like esoteric market that's so small, but I'm very passionate about it. So the VC should also be passionate about it as well. No, the VC's thinking, is this market big enough to actually be able to help me like return the fund? If it's not, because is this going to be, you know, the one company out of the portfolio that's actually going to succeed, that's actually going to allow me be able to like, you know, return it? And I think like that's something that really flies over people's heads.
Right. They don't put themselves in your shoes as much to understand, but at the same time, they might not know your business. They're experts in their operations, so might not know all the incentives that you have on the back end to say why should they give me their money, like, because they don't know how much multiples you might need to make off of that investment. They think it's a good investment because it's theirs, and it might, you know, 2x, but you need them to 10x.
And sometimes too, like it's like people are so closely tied to their businesses, like it's their baby, you know, they gave up their 9 to 5 to do this full time. And I'm like, not every business is VC backable, and that's okay. Like
It's hard to hear that.
it's hard to hear that. It's very hard to hear that. But like I think that's something that I've become more and more comfortable telling founders. Not every business is VC backable, and that's okay. Like there are actually other models of like being able to grow, and I think that's one side on the VCs that I think often goes over people's heads. I think the other side is how much founders actually exit their businesses with. So, for example, you hear, okay, this business sold for $400 million, right? I have met founders who sold their businesses for $500 million that walked away with 10K.
I would not have thought that because, and you know what it is? The headline will say, "Oh, this founder sold their business for X," but you don't know how much they actually pocketed on the back end.
Exactly. And
Right.
that's for a couple of reasons, right? Whenever you're raising a new round, you can expect at least a minimum of 20% dilution.
Okay.
I tend to think that a lot of founders are raising capital when they should be bootstrapping. So by the time they're actually exiting their business, they're owning minuscule percentages of their companies. And even beyond that, there are loops and bounds in there that can sometimes like throw founders. I think especially when I deal with like non-traditional founders and founders who didn't grow up with parents who are teaching them finance, talking finance.
Right.
I think sometimes people get excited by like receiving money, and not all money is good money, is what I always say. Especially like even in venture capital, there is something called a liquidation preference, which if baked into the term sheet can basically mean, let's say for example, you're raising, I don't know, let's say you're raising 20 million, right? And
Bill, 100.
it's 100 million.
100
Okay,
million, yeah.
let's say you're raising 100 million,
Yeah.
and all you care about is who's gonna give me 100 million. Where can I get 100 million from? I'm like, hey, I'll give you 100 million at a 2x liquidation preference. That means that whatever you sell your business for, I get 2x of my money before you get a cent of your own money.
Yeah, they have the pref.
Exactly. Right. And so it's like little things like that. I think a lot of founders are often excited by like money and raising capital. They don't actually know that there are things in the term sheet that they should really look out for. And I think that's where having a good law firm behind you actually comes into play.
Gotcha. So when because you're coming at the seed level, is this something that you advise them on and become advisory operator for them? Like, how does your role play in? Because I can imagine if you're getting your equity in early, you're gonna want to, whether having a say or looking at the terms for other equity owners to come to the fund. How does that relationship work when you're the seed and they want to raise a Series A, Series B, and then other investors are now diluting the shares? How does that relationship work with other investors?
So I usually invest on like safes or like convertible notes.
Okay.
And you go to like YC, they have like standard safe notes that are there. So that way I don't really have to do too much like, paperwork and drawing up and all of that. But I'm known to negotiate for my discounts. I might ask for like
That's
because
sharp.
a lot of times I'm the first check in,
Right.
And I think for me, even beyond that, I never invest in the founder. Well, at least I would say over the last 5 years, especially of doing this, I never invest in the founder that I don't personally like. I, I don't see this being like a lifelong relationship. So as far as I'm concerned, like it goes beyond this check. Like I'm thinking about the business in a strategic way. I'm thinking about, okay, these are the opportunities that we need to lay out for. I'll give you a classic example. I invested in a company and tech mobility platform that basically does all the back end of like logistics for business pivoted, and like they do all the back end logistics for some of the biggest names of the continent like Coca-Cola, the tax in the postal industry in Ghana and all of that. But when I was going in, I was like, this is going to be a lifelong relationship. So I negotiated for a discount, literally coach the founders, into like how to attract other investors, how to talk to other investors. We practice the pitch into perfection. I introduced them to the folks at HBS during the African Business Conference. They ended up winning like second place. Through that, they met like a bunch of the people that came on to the next round, and we basically just have held hands when the co-founders were like parting ways, helped like negotiate that to make sure that equity wasn't a problem. So I think like for me, I've continued to see like a lot of these relationships as more like lifelong. And so I think about that when I'm thinking about like going into a company full time. Well, not full time, but like when I think about like investing in a company on the long term.
Right. Right. So, what would you say when you got into VC full time? And you said that was about 5 years ago. What did you think about the industry coming in, and what have you learned now that you're in the industry that you wouldn't have known unless you were in the industry? And this is more so targeted towards the professionals out there that might be in private equity, they might be in a different asset class, thinking about getting into venture capital. They see you already talked about some of the glitz and glamour of it. What are some of the things that they should think about that they just might not know from the outside looking in?
Firstly, I think you need to love like you need to love meeting new people. You need to be genuinely like intrigued by new ideas. You need to be someone who is willing to ask yourself like what are the billion different ways that this can go wrong, right? Like what completely collapses this business model? What's gonna come in and like eat your lunch? I think you need to be the type of person who's comfortable with like asking some of those questions, but it's also very big on you putting yourself out there and like meeting founders who are building amazing things. So if you're not a, I wouldn't even say if you're not an extrovert because I don't like. I think that varies heavily from people to people. But if you're not the type of person who likes to spend your time, like, going out to conferences, meeting people who are building things, if you're not intrigued by new ideas and different ways that things can be done, this might not be the industry for you. And I think also just if you don't have empathy for founders, like if you don't, if you're like, why would you give up a comfortable 9 to 5 to like
Right.
chase your dream
Right,
or
right, right,
whatever?
right.
It might be a tad bit more frustrating for you to like connect with folks. But yeah, I think those are some of the key things.
So, if you have a young founder that's a recruiter, for example, started his own show, the investment committee, looking for funding to, build studio space, update the cameras, get some bigger plants, is that someone that you would, take a look at to?
I wouldn't say you should raise capital for that. I think there might be like smarter ways to go around that. Even if you get like a short term business loan, or you get like a grant, from and I think a lot of people underestimate like the other ways to get capital than venture capital. Like I think venture comes into play where you're ready to actually accelerate like at a particular point.
So you're saying I'm not ready to? I mean, that's what she said. I think she just said it's not an a VC investable business. It's okay. It's okay. We're getting there. We're getting there. It's all right. We'll be on her radar soon. Don't worry about it. Don't worry about it. So, switching gears. Big picture when it comes to VC, particularly with African companies across the continent. What does the current landscape look like, and how has it been developing over the years?
I think to probably touch on where we are, it might be helpful to take a step back on where we're coming from.
Talk to me.
Right. So I always laugh at people. Sometimes I get frustrated. I'm just being honest. I'm like, because I'm one of those people that someone asked me, why did you start investing? I was like, because I kept hearing about like Africa Rising when I was in high school and college, and I just got tired of not seeing it. Right. I decided to like do something about it and like put my capital to work. But I think sometimes that frustration comes from like not recognizing how young, especially like our tech ecosystem is, right? Like how young, like our venture ecosystem is. I think in 2016, sometimes I think back to it, I'm like, okay, if I had to like put a pin on when like things really started, right? Like
Okay.
what would I where would
Right,
I kind of
right.
like associate that to?
Yeah.
Now, Mark Zuckerberg visited Africa. Nigeria was one of the places that he went to in 2016.
Okay.
And I think that was probably like the first time that I heard other folks around me in America suddenly being like, wait, what's going on in Africa? Like, why is Mark Zuckerberg there, right? And of
If
course,
he's there, something's going
if
on
he's
there.
there, something was going on, especially from like the tech space, right? And I might be wrong, but for me, in my mind, that was kind of like the beginning of, the rumblings around, ooh, how do you put money to work on the continent? Now, given we'd seen a barrage happen, which was a scandal that happened, I think, in the early 2000s, where a bunch of people tried to like invest in emerging markets, but basically sadly invested in like a scam, right? And a number of like companies got burnt. I know like big banks on Wall Street invested in a barrage and got burnt. And so for a lot of companies after that, they were like, no, Africa, we don't understand that place. We don't know how to do this. And effectively just like close their checks in their pockets towards the continent for a while. So I would say like where I started seeing like the rumblings happen again is probably like 2016 with the visit of like Mark Zuckerberg. In 2016, I think around 363 million was raised in VC funding in the entire like continent in 2016, right? Then you fast forward to 2020 where we saw Stripe buy Paystack for 200 million, right? That was a big one where everyone was like, oh, like this is like the first big exit, that we had seen in a while. And everybody still talks about that. Like that's the biggest exit that's happened on the continent. It's not, by the way. We had InstaDeep, which was bought for about, I think, 680 million or something like that. That's probably like one, which is an AI company, by the way, out in Tunisia, that was bought by a German company. That was definitely one of the biggest ones, one of the bigger ones. So yeah, 2016, we have like 350 something and some change million come in VC funding. In 2020, we had about 5.2 billion.
Wow.
Right? So it's 2021. That's a jump between 2016 and 2021. Now, last year, I think we did about 3.2 billion, 2.2 equity, 1 billion debt. So I think I say that to say it's definitely on the younger side of things, right? Silicon Valley has been around for
forever.
Forever, right?
For 100 years, basically.
Yeah, but I think one of the things that I continue to be really encouraged by is the speed at which things can actually happen on the continent, right? Like if we see that jump from 350 something to 5.2 billion, a part of it is also because institutions started to like take notice. You had A16Z coming in, investing in, I believe it was Carry First, right? You have QED that suddenly set up shop and like invested in African venture as a Series A. You had Sequoia. Sequoia has about 6 investments on the continent. And I think it's quickly become knowledgeable to a lot of American venture funds that for you to effectively be able to play in the VC space on the continent, you need to know what's happening there. And I think that happens to be one of the major barriers because people look at Africa and they're like, oh my God, all these people, where do you start? Like, how do you even go about it? And the truth of the matter is, I don't believe that you can do due diligence on an African company the way you do on American companies.
Explain that.
Because I mean, in America, it's like, okay, you meet a founder, great idea, probably went to like Harvard, Yale, Stanford, Princeton. Okay, you pick up the phone, he speaks to his roommates, pick up the phone, speaks to another professor, figure out like where his first job was, get like I think
Get all the background.
Get all the background, says all the references. It's a lot easier, it's a lot cleaner, right? You look at a continent like Africa, 54 different countries, right? And the funniest part is that even if you look at like Nigeria and Ghana that are so close, so close to each other geographically speaking, the reality of doing business between Nigeria and Ghana is night and day.
Really?
And what I mean by that is some of the issues that you run into in Nigeria, you don't run into in Ghana, and vice versa. An interesting lump mass of a continent where in each different region, you're dealing with different macroeconomics issues, right? You think about like some of the inflation issues in Ghana. You look at some of the currency issues in Nigeria. Think about some of the political instability in South Africa. You think about like it's just it just varies from place to place, right? And I think like sometimes the struggle can really be how do you build a singular like African strategy that you can map across different countries in a form of like a rinse and repeat. So it's like, okay, what sectors do we believe in? What drivers are we looking for? It gets messier because you have to kind of go like country by country. And I think like for those of us that were like, okay, I can't have my entire portfolio just be Nigerian countries because when that government decides to devalue the currency overnight, literally because they can, you just sleep and wake up, right? And they're like, today we feel like the naira.
Too much currency risk.
No, literally, like today we feel like the naira should be devalued by 30%. So that's what the central bank does.
That's what's going on.
And things like that happen. It's a real thing, right? When things like that happen, you just cannot have you can't have like an all Nigerian portfolio. You can't even have like an all West African portfolio, quite frankly. So it's like understanding the different trends that you're looking at and being able to like map
how you construct your portfolio has to be completely different.
And
then, but you see, the thing is, you have to get messy if you want that edge, though, because if you do when you do get it right, you will have outsized returns. So it's if they talk about being a contrarian investor and going places where other investors don't want to go or other investors aren't comfortable and taking that plunge, you will see outsized returns for your investors because I can imagine how crowded Western American markets are and how how much white space there is in African countries. So it's hard work, but that's where you earn your check. That's where you earn your carry, your promote.
I completely agree. And I think like it's it's hard work, it's messy work, and it actually requires boots on the ground of some form. So now, you might not be based there, but you need to actually have a network that's deep enough to be able to reference founders. I'll give you a classic example of something that happened to me last year. I was looking at a particular company. I thought it was interesting. There was something that I couldn't shake. I just had this weird. I was like, there's something about this model that doesn't sit. Right? No, literally, there was something about this model that just doesn't sit right with me, and I was like, something is off. And I remember I just kept saying that for a couple of days. I was like, something's off, something's off, something's off, something's off. So what did I do? The first thing I always do, I picked up the phone and I called Mohammed, one of my friends who runs Launch Africa Ventures. And I was like, hey, by the way, want to talk to you about this company, you know. And he's like, oh yeah, send me the pitch deck. Send him the pitch deck. He's like, wait a minute, I know this founder. And he was like, oh, Jemimah, I know this founder. Turns out that the founder had basically built a business like this, raised a bunch of money from investors, literally disappeared, and now has come back a couple of years later with the exact same business but a new name. But in his pitch deck that he had sent, had forgot to like change the name on one of the pages, which is how like my friend
Was able to backtrack.
recognized, was able to like back check him. So my friend said he actually sent him a message and he was like, in this life, don't do people wrong because you never know when it's gonna come back and like bite you, right? And exactly. And but I say that because I think the power of like having a network on the ground, whether it's in the form of like other founders, other VC funds, you have to have those. Like it's what's gonna allow you to actually be able to do good business. Because otherwise, if it's just you by yourself coming from America with your millions of dollars, there's a lot of different ways that that can go. And if it's just you by yourself, it's not gonna go
So
right.
how often do you travel to meet with founders?
So well, thank God for Zoom, firstly. I'd say that. But I think one of the really interesting things is I found that the more you meet with amazing founders, just honestly, right? One of the things that I spent a lot of time doing, especially in 2020, 2021, 2022, was I remember I was just like, hey, LinkedIn, I'm Jemimah. This is what I do at this firm. These are my skill sets. If you're an African founder who's looking to raise capital, but you're struggling with XYZ, whether it's like pitching, fundraising, please drop me a message. We'd love to spend some time thinking about how you can like refine the strategy, what investors we can also connect you with. Because mind you, in my day job, I was meeting so many investors who were like, oh, we're interested in Africa, but we don't know what deals to look at. I was meeting so many founders who were like, we're looking for investors, but we don't know who to go to. And I was like, you're just this natural bridge, right? And so I was like, just, this is who I am. This is what I do. I'm free on Saturdays and Sundays. This is my Calendly.
Right.
Please find the time.
Right.
And the number of like founders that and mind you, I was not looking for equity. I was not looking to invest in the companies. I was not looking for anyone to pay me as a consultant. I was not trying to moonlight as a startup advisor, any of those things. As far as I was concerned.
I'm sure you could have gotten a little something, though,
and that's okay.
Yeah.
But as far as I was concerned, I was like, okay, I'm a daughter of the continent. These are the skill sets that I have now. How can I give back to home in a way that actively like helps companies be able to get to where they want to get to, right? So I did that for the most of like 2020, 2021, 2022. And I think just by that alone, I cannot tell you, Dom, the number of phenomenal companies I met. And also, word travels fast in this industry. You help one person, they're gonna tell all their other friends about you. They're gonna like, hey, by the way, if you're looking to, and a lot of times it's like the smallest things. Like, hey, let's go over your pitch. Let's hear it again. Like, okay, you want to talk to investors. What does net profit mean? What's your margin? What's your take home? Like, do you even know what those terms mean? Can you actually speak in that way?
For that.
Exactly. And I think like that's where African founders oftentimes like lose the edge and lose the conversation. It's not because they're not competent. It's not because they don't have phenomenal businesses that are oftentimes actually profitable before they're even raising, but it's because they don't know how to speak investor languages, right? And so spent a lot of time doing that. And yeah, and then that way people were just like, hey, by the way, meet this founder, meet that founder, meet this person, meet that person. And you kind of like build your network out that way. But I try to have boots on the ground at least twice a year. Yeah, it's definitely been more over the past couple of years, but for me, a minimum is twice a year.
Gotcha.
Yeah.
And so it's funny because I was gonna ask, I heard this myth. I wasn't sure if it was true or not. But can you tell within like the first 15 minutes of a pitch if you'd ever invest in them or not? Or because it sounds as if that's typically what might happen, but you will take the time to go deeper to see if it's just a communication thing and to see if like you will uncover the pages to go further and further. But is that generally like you see within the industry, like a VC might write a company off very easily within a pitch?
Yes.
Yeah.
I've definitely seen that. Like, I think you can often tell when people start pulling out their phones, when someone's pitching or like I've definitely seen that before. And like I said, I do think that there is a level of empathy that's needed and a level of like genuine respect for founders. And like my parents are entrepreneurs, right? So growing up, I watched them like, be able to like think about like raising capital, like what does that look like, all of that. And so for me, there's an inherent respect that I actually have for founders. And like you could have had a nice cushiony job that's like your 9 to 5, but no, this thing that you're building is so important to you. It's worth risking it all, to live this purpose that you believe is your purpose. And for that, I top my hats to you. Like that you can have
courageous, the
literally,
risk, like
you can have the 30 minutes or 45 minutes that you want. I am here, I'm present, I'm listening. Like let's talk about it. I do think that there are folks who I think I've definitely seen people, dismiss after the first like 15 minutes. Sometimes it's the saddest things because it's like I look at you up down. Do you look successful? Do you have, the status symbols? No. Okay. Are you technical?
it's more like judgmental.
No.
Very, very
Yeah.
judgmental.
Or like things that I've seen work in the past. I think people like that would continue to invest in the same old type of founders. I don't think that they're gonna find like the diamonds in the rough, for lack of a better word. And for me, it's the diamonds in the rough that I'm looking for.
Exactly. Yeah. That's the name of the game at the end of the day. Switching gears. So what is the typical career path within venture capital? What do you need? What's required? If I wanted to, whether I'm in college and aspiring to get into venture capital, or I might be in another area of finance trying to pivot into VC. How competitive is it to get a VC job, and what are employers looking for?
So I think what's really interesting, like I said, I think VC has come like really sexy over the past like 5 years, right? And so they're these like perceived like, iron gates. You don't get through the iron gates without like going through the gatekeepers or whatever that means.
Yeah.
If I was in college and I was like, oh, I think I want to work in venture sometime in the future, what I would actually do is go work for a startup.
Okay.
Like get that operating experience because I do think that the best investors that I've met are like ex operators or like ex founders because no one's about to blow you smoke, right? Especially with like business models, distribution models, like you're so closely tied to that. I think one of the things that I did when I was looking to pivot into this industry was I did like a VC fellowship. And basically you were working with you were doing the job of a VC, except you still had your day job. And you were doing this like as your night job, you were like meeting founders, evaluating pitches, helping them clean up decks, helping them think about like go-to-market strategy. Really just like doing the actual work. I do think that a VC fellowship is actually very important because there's a lot of like unsexy parts of VC that nobody wants to think about, nobody wants to talk about. No one wants to ever talk about how much they hate portfolio management, or literally, or like having to like clean that up, especially for like LPs. People don't really think about that. They think about VC and they think about I don't even know what they think
I
about.
get to travel.
They
I
get
get
to
to I get
travel,
to meet all these
meet all these
people.
people, go to all the
Yeah.
cool conferences, go to all the
Right.
parties.
Yeah, exactly.
And it's that's not that's probably like 1% of like your life or like 1% of your day. You have to enjoy the process. But interestingly enough, I think one of the things that I noticed quite early in my career, especially just like in finance, is that it's a circle. And I'll explain. I feel like everybody that I know who works in like sales and trading wants to work in banking, right? There's this concept that the grass is always greener on the other side. The grass is not green where you
I didn't think the public market guys would even want to be in the private side. I thought they like the pace of sales and trade. The private side is just slower. Deals get done less. They're bigger. They're sexier.
Exactly.
But I could
Exactly. Everybody, I remember during like my analyst years, I realized that like everybody that works in like markets wanted to work in banking. Everybody wants to work in like TMT banking. You know,
Yeah,
that's what they want to say.
yeah.
Everyone was working like tech banking.
Exactly.
Right.
SPAC era. Right.
Literally.
That was the
time.
time.
That was the
That was the
time.
place to be.
That was the
Yeah.
time to be
Everybody
alive,
wanted to be.
honestly.
Yeah. Everybody wanted some kind of tech edge into. Yeah. When I was recruiting into PE, everybody wanted something to. Even if you're in consumer, no, it has to be consumer tech. It has to be some sort of tech spin
Yep.
to it. Yeah.
So yeah, so like everybody like in markets, you know, wants to work in banking. Everybody in banking wants to work in like private equity. Everybody in private equity wants to work in like venture
And growth equity.
and
Yeah.
in growth
Yeah,
equity.
yeah.
And everybody in venture wants to like go to business school, like wants to be in a startup. And everybody in business school wants to work in venture.
Right.
And that's what I remember sitting back and being like, it's a circle. Like
Right.
nobody actually knows what they want. Everybody just assumes that
Everybody
like
wants what they don't have.
everybody
I see that in recruiting
else's
all the time.
everybody just
All the time.
assumes that everybody else's life is so much sexier than
Yep.
theirs, is so much better than theirs. I do think that I made an important decision in my career very early that I was gonna do what I wanted to do.
Yeah.
So even if it doesn't make sense, I'm gonna do what I want to do because that's what I want to do.
Right.
I remember making the move from PE to VC. I remember a mentor said to me, "Who moves from doing private equity to doing venture capital?" I said, "I do," because I've also found a role where I can directly work with founders and actually help them like build their businesses. Like we can create like curriculum that takes our ragtag founders who are phenomenal executors and operators into like folks who we can put in front of like our other investor friends. That's what I want to like actually spend my time doing, like being in the mud with them. And I kind of like wanted more of that operational experience where, you know, you're in the business model, or you're building the financial model, you're like helping like define the go-to-market strategy, you're helping define the sales motions, all of that. I wanted that, right? And I was like, this is the right move for me. And I remember everybody said to me, "No, this is career
Crazy. You look
suicide.
crazy, right?
Like you're insane. Like, you know, what's gonna happen to your comp? What's gonna?" And I'm like, no, you actually have an opportunity in your career to like carve your own path.
Right.
And I'm really glad that like I learned that at a young age because
You didn't follow the herd, and it was about, listen, I know you knew what you had in here and how much you give to this space versus other spaces. Do you know how crazy people looked at me from going from private equity real estate to recruiting? Yeah. So it's wicked. So I can't even imagine. I can't even imagine what that must be like. But you have to be strong in and decisive.
and you know what you want.
Yeah.
Like you know what you want, you know who you are,
Mhm.
you know the things that are important to you,
Yeah.
you know what's gonna I always said to myself that I want my job I want what I do on a day to day to feel so impactful and to be so excited about it. I'll do it for free.
Yeah. Yes. Yes. Like
Because I don't think there's anything intriguing about like, you know, this weekend to, oh, how's your job? I hate my job. I hate my job too. Then why are you
it's
doing
just
it?
too many hours in the day, every day, to hate it.
You know,
You had to find it. Yeah.
no, I was determined that I was going to continue to work in spaces that I love, that I'm passionate about, that I care about, and also that just like feed other aspects of my life because it's really beautiful. The investors I meet in my day job, right? I'm able to connect like my founders, like my African founders to them. Now I'm able to like, connect my African founders to my day job as well and like do like follow on. It just ends up being this beautiful circle that leaves you knowing that you're exactly where you're supposed to be. And there's no other feeling like that. You can't put a price on that.
That's beautiful. That's absolutely beautiful. And tell me, Jemimah, how do we create more Jemimas in the world? How do we create more yous in this world that are successful Black women investing, whether it's in VC, whether it's in private equity, that are really challenging the status quo? I mean, they're I just see how much of an example you are, how you shine brightly in a room. So how do we create more Jemimas?
That's very sweet of you to say. I think first things first, just care about the communities that built you. I think there's something about America that sometimes, and I roast a lot of my friends that work in finance, by the way, about this. I think there's something about the comfort of, you know, you're in your New York apartment and you're living your life and you're chilling with your friends and doing brunches, right? We forget that like a lot of the communities that raised us, it's up to us to make it better. And so I speak a lot about like the diaspora investing back on the continent, pathways for people to actually be able to actively put their money back at home to use, because I sometimes feel like it's a ticking time bomb that no one else can see. By 2050, a quarter of the world's population is going to be African.
Wow.
Like, you think about the current lack of infrastructure,
Mhm.
you think about the food shortages that we're seeing in East Africa, you think about even just the percentage of the continent that's living below the poverty line, and you say we're about to what, double that population?
Right.
We don't have what it takes to feed our people,
Current population.
right? Exactly. And I think, like, for me, alarm bells just keep going off in my mind. I'm like, what is the plan? Like, it's the governments don't, that's not what they're focused
Their MO
on,
is right.
right? And I think so for me, I say that because it's not enough to just, go to Ghana, do Dirty December,
Hey.
go to Polo Beach Club, watch the
Hey.
sunrise, go to Nigeria, go to like House of Obi,
Okay, some
do all
jollof.
to get some jollof, get some
Nice.
wache,
Talk to me
go to
nice.
South Africa,
Yes.
be on Table Mountain with your
Yeah,
friends.
nice sunset.
Nice sunsets,
beach.
nice beach, come back to New
Yeah.
York and, do the
Valentine's
live.
Day coming up.
Look,
Yes.
that can't be life. Like, it cannot.
Right.
Like, we are the ones that the continent exported, where we were born and bred. If we have an opportunity to contribute and to ensure that we're building the very infrastructure that allows us to live seamless lives here, it's our responsibility to take that back home. And if you think about it, we are some of the most educated people. If you put us back into the context of the places that born and bred us, right? Like, and I say this to people all the time. I'm like, it's not just about like working in finance and, being like, oh, I work in finance and now I'm going to go invest on the continent. No, whatever skill set you've built here, figure a way to take that back home. Even if it's on a pro bono, every Saturday and Sunday, you're, helping people. Like, I have friends who are lawyers who now do pro bono for like African startups to help them like look at their term sheets, like help them make sure that as they're raising capital, they're like not shooting themselves in the foot, so that they can actually exit their businesses with a significant proportion of like the whatever it is that they raise. Like, there's so many synergies. I have friends who are like helping their governments think about like, okay, what is our AI strategy? Like, how we're gonna actually embed that into the law? Like,
That's powerful.
but it takes a level of presence and a level of like actually caring to be able to do things. Intentionality, right? To actually be able to do that. Is it a lot more work? Yes, it is. But guess
the
what?
value.
The value.
You're adding so much value. And that's why I wanted to start this show, because I wanted to broadcast that. I wanted to broadcast that there is value out there to the founders out there that say, hey, oh, so Jemimah knows connections that are doing these kind of things. We might need that help. Like, this is part of my way of giving back, because I want this content to flourish across international waters, so that they could see what's possible, so they could find solutions, that they could hold, their cousins, uncles, aunties accountable that are over here. Hey, what are you learning? Come teach us. What's going on? What's the infrastructure like? How can we build it over here? And then, we have Zoom now. We're not back in the 90s where we always had to take a flight to communicate back home. We could FaceTime. So there isn't an excuse. Like, everything all the solutions that you just said are doable or plausible. It could happen, and happen at scale.
At scale. And I think that's the word.
Right.
And so I say to myself, if I can infect all the people around me enough to be uncomfortable if they're doing nothing, and they can do that to their friends, we can actually we can really get something going.
We can.
Right. And it's important.
Yeah.
It's important. Like, we didn't come this far to get comfortable
this far.
now,
Yeah.
and drink wine and champagne and, be happy with us and ours. Like, no, there's a continent that needs to be built.
Victory will defeat you. And that's what it is. I can't say it better than that. Lightning round.
Let's go.
Morning person or night owl?
Morning person. I'm like
Really?
useless after 10 p.m.
Yo,
Yo,
it's almost 10 p.m. now.
It's bad. No, like, ask any of my friends. I'm also, I can nap anywhere.
Yeah, I'm like that too. But I'm a night owl in that way, though.
No, I can nap anywhere. I'm usually up at like 5:30 a.m. because I wake up. I'm a Christian. So I wake up, I pray, I meditate, read my Bible. Start the day with a clear head.
Gotcha.
my phone comes on around like 8:30 a.m. So usually no one can get me before then. But just like center myself before my day.
Yeah, that sets the foundation. That's beautiful. So you're in bed by like 9.
I'm in bed by like 9:30. So yeah, when people are like 1 a.m., I'm like, I'm gonna
Miss
catch
me.
you later. Literally miss me with that.
Gotcha,
But
gotcha.
if it's an important enough like occasion, I just came from a wedding. I will sleep during the day so I can be awake at night. If it's important enough, I'll be there. But otherwise,
Yeah. Catch you in the morning.
catch you in the morning.
Gotcha. What year would you travel to and why?
Oh my God, this is gonna sound crazy.
Talk to me.
2021.
Okay.
You know why?
Was you
The-
investing all the startups?
No, not even the startups. The keywords, people. 2021, NVDA, Bitcoin. You're like, yeah. I think sometimes I just look back at like some of the price charts, and I'm like, wow, these things really fell to like this low,
Yeah,
and we
right.
still did nothing.
It was like Bitcoin was like 3K.
Which is
Bitcoin was
insane.
3K.
Absolutely insane to
Yeah.
think about. But yeah, if I could travel to any year, that would definitely be a top one.
Yeah, that's up there for sure. I mean, listen, Bitcoin's going to $1 million, so we could start now. We look back.
This
back
is not financial advice.
It is not.
We're,
It is not.
we're not
SEC, please. Like I'm just black business trying
do
my
your
best.
research before you purchase.
Before you purchase
stocks.
anything. Yeah, all the disclaimers. We'll put it at the bottom somewhere. Hopefully, yes. All right. Most irrational fear.
Most irrational fear, wasting time.
Strong. I don't think that's irrational. I think that's you hold yourself accountable in a strong way. That's what that is. Yeah.
Wasting time and clowns. I hate clowns.
That's irrational fear. There we go. We
I
uncovered it.
hate
People.
clowns so
We uncovered it.
badly.
We uncovered
Oh my
it.
gosh.
Yeah. There it is. There it is.
It's not just clowns. It's anything that's like life sized that isn't human. So if you think about it, like walking through Times Square, that is the worst thing. I cannot.
You work
Like
near.
I know it's a daily nightmare. Mind you, I've been able to basically fix my commute in a way that it takes me longer. No, I literally it takes me longer and I go all the way around, but I like miss that,
So you just have to be like on a beach.
I just have to be on a beach. That is all I want. That is a life that is meant for me. But yeah.
Anything? Okay, that's a lot. Like your whole life?
Yeah.
Wow. My condolences. Okay. If you could learn, if you could learn a new skill, what would it be?
A new skill. Probably like parsing through data as quickly as possible.
So ChatGPT.
You're right. I love being my AI agents. But I think it'll probably be like understanding things a lot faster.
So there's the so like being able to like if you had the ability to like wear goggles and see the data and like you would see
You know exactly what you're looking for. Like I don't have to like pass through, your 300 like Excel pages. Like and I think also like pattern recognition. That would be beautiful as well.
Yeah. You play some poker. It helps with the pattern recognition.
Really?
Big advocate for poker. Yeah, for sure. It sharpens that real quick. One meal for the rest of your life.
Oh my God, beans and plantains.
Beans and plantains?
Yes.
Yeah?
Yeah.
Where's he meat?
I'm such a Nigerian babe.
Nope.
I don't look.
No chicken, little beef,
No.
little curry chicken.
But the craziest part is the plantain has to be like really soft.
Yeah.
Like it like mashes into the beans.
Yeah.
And it's like really hot.
I like hot. I
and
like hot.
Sprinkle some Gary on top of it.
What's Gary?
Oh, we gotta put you on.
Put me on.
Yeah. It's Nigerian food.
Yeah. Chef it up a little bit, man. Yeah.
It's Nigerian food. It's good.
I got you. Proudest moment.
Proudest moment. Ooh, probably has been. I think I've had a couple over the past couple of years. It's the same thing, but I think like helping like young Black women like break into the industry.
Yeah.
Yeah.
More Jemimas.
Every time I get that, like I got the job.
Yeah.
Like let's go.
Yeah, I feel that when I became a recruiter and like help people get their job and they call me and they're excited and they're ecstatic and they want to go party, they want to go like have fun, like that That's amazing. That I'm happy that you get to have that effect. Well, Jemimah, I appreciate the time. This has been an amazing interview. Thank you so much
Absolutely. Thanks
for
for
coming on
having
on
me.
the show. I will get to the point where I deserve your VC funding one day. Hopefully, look out for the next episode. Thank you so much.
Thanks for having me.
No problem.
Bye.